to be a something that really, really, really catches the eye of the West. They're not going to go down easy, but this is something, this is something to definitely not underestimate. And even JP Morgan came out and said, I don't know exactly what they said, but it was pretty much like, yeah, this is actually very legitimate. And it's the most legitimate challenge to the dollar that we've ever seen, more or less is what they said. So here we go.
I don't think it's a load of hogwash. I mean, the story, as you rightly say, was that I think something like 50 million ounces was sucked into London when we had the failure on October the 10th. Basically, that contract was effectively suspended. We're not talking about a regulated market, but there were no dealings. It just sort of seized up for about an hour and a half on October the 10th. And consequently, there was an arbitrage coming out of China. But now that China is not only forbidding the export of gold, it is now forbidding the export of silver, or at least will be doing so from January the 1st.
And interestingly enough, BRICS Pay, which is B2B, business to business or business to consumer or bank to bank, small bank to small bank, is like a credit card system where if I live in Brazil and I'm going on a trip to UAE, I can just pay on my BRICS Pay app and bang, it's instantly done instead of having to convert and do all of this stuff. But I listened to an interview by the guy who developed, and he said, we are right now in negotiations in China right now to roll this out to the Belt Road Initiative. That's what they're going to do with the mBridge, or the unit, where you're opening up to 75% of human population, 150 countries, not just the BRICS nations. And this is the part that the naysayers and the poo-pooers have missed continuously. Sergei Lavrov came out and said, no, we're opening this up to everyone in the world except the UAE, or the United States, the European Union, and Great Britain. They can't use it, but the rest of the world can. And so it is a basket-backed collateral anchored system, token, used to settle trade invoices. The key of it that I don't think I talked enough about, but that really makes sense to me, is that the unit will make measures the BRICS plus currencies in gold terms instead of you're measuring gold in currency terms the way it is now, where you measure it in dollars. All of these currencies, their value will be measured against gold. Gold is the reference in all of this. That is the important part to remember, is that gold is the reference in all of this. And
the new BRICS settlement token represents a fundamental break from the dollar-centric system. Instead of valuing gold in currency terms, this model values currencies in gold terms, reversing decades of financial convention. Gold becomes the universal reference point, not the U.S. dollar. With this structure, trade between participating nations could settle instantly in gold or gold-backed units, bypassing Western intermediaries. Such an approach threatens the dominance of the dollar and the U.S. Treasury market, whose global reserve status depends heavily on trusted settlement infrastructure. As more nations adopt a gold-anchored mechanism, Western bond markets could face increasing pressure and long-term capital outflows.
In essence, what it's going to be able to do is allow countries to trade with other countries using this settlement vehicle, which allows for immediate delivery in gold. And all of it will challenge the hegemony of the West, because sales or transactions will chip away at the transactional status of the dollar, devaluing it. And ultimately, gold being the anchor to all of this, which has destroyed the performance of the 10-year Treasury without any counterparty risk, will start to massively chip away at the reserve status of the Treasury and of the dollar. So the bottom line here is that it's in beta testing right now. So the claim that it had been launched successfully, it's been launched, but in a beta test. One last point I'd like to make about it. You didn't hear about this until here it is, right? Why? Because the United Arab Emirates, China, Hong Kong, Thailand developed the program. Shortly thereafter, Saudi Arabia wasn't involved in the initial development, but they came on as the fifth, and they're a big one, right? The largest oil producer, OPEC. They came on as the fifth participant in MBridge. Think about that for a moment. Cross-border settlement for things like oil, and Saudi Arabia is the fifth primary member. Now, all of this, as just for a refresher, people don't know this, was developed in concert with the Bank of International Settlements Innovation Hub.
The settlement system, known publicly as mBridge or Enbridge, was quietly developed by the UAE, Hong Kong, Thailand, and China, with Saudi Arabia joining later. The involvement of the world's largest oil exporter dramatically raises its geopolitical significance. Initially, the Bank for International Settlements supported development, but abruptly withdrew at launch, claiming it could not be involved in any tool enabling countries to bypass Western sanctions. This unexpected reversal ignited frustration within BRICS, especially China, and pushed the project underground. Since then, expansion has continued discreetly, linking Asia's major trading blocs and accelerating adoption of central bank digital currencies in non-Western regions.
I remember before Michelle McCory worked for me, I was doing an interview with her on Kitco, and she said, well, I said this to Andy, isn't that a Western institution? I said, you know what? You're right. Ding, 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 ding. I don't know why I didn't really think about that. And she's like, couldn't they perhaps have other interests or something? And I'm like, yeah, you're right. Almost immediately after that, the UAE pulled out. The Bank UAE. Got too many acronyms going through my head. The BIS pulled out at the 12th hour, right when they were going to make it go live at their meeting in Novigrad. And they said, we can't be involved in any transaction, even though they've been doing this for 4 years, developing it with these people. Well, we can't be involved in any program that would allow any country to sidestep Western sanctions, acting as though they just realized that Russia was the R in BRICS. So that really got the BRICS countries mad, in particular China, very mad. And that's why it's gone dark. You don't hear a lot about it anymore. Now, we knew that they were still working on the bridge technology. And we've talked about it a little bit on your show here, how they have already connected with the countries in Southeast Asia, the Asian countries that are 800 million people, twice the population of the U.S., the largest trading partner of China by far, not the U.S., those countries in Southeast Asia. And now they have the ability to go back and forth with central bank digital currencies, or ultimately the unit, free from Western interference, settle in 7 seconds, no intermediary banks in New York, no sanctions. It's happening. And it's happening now in a much faster way where they're actually testing the unit. Now, they never tested the unit before. It was just cross-border currencies. And I've been consistent with you saying, yeah, this is the rails of the unit. Now, they've gone quiet because what the BIS did at the 12th hour, in my mind, is James Bond espionage. They infiltrated. They said, yeah, we're here to help you. We'll integrate this new system to the West. And then bang, they pull it at the 13th hour, 12th hour. We're out. And they back out. So this is, in essence, because the Chinese pretty much developed it, this is going to continue to progress, but maybe not with the transparency and seeing how it all unfolds in real time as we would like. We just found out that the beta test happened. Okay, here we go. So I guess we'll see in 2026 how that rolls out and continues to develop. But
despite going dark in Western media, development has advanced rapidly. Several Southeast Asian economies, together representing more than 800 million people, are now connected to these new digital currency settlement rails. Transactions clear within 7 seconds, with no New York correspondent banks and no Western oversight. For nations seeking insulation from sanctions, currency volatility, or dollar dependency, this alternative system offers a powerful advantage. The platform is currently in beta testing, but early participants suggest that 2026 may mark full deployment. Even major Western banks, including J.P. Morgan, have acknowledged that this may be the most serious challenge the dollar has ever faced.
I expect it to be something that really, really, really catches the eye of the West. They're not going to go down easy, but this is something, to definitely not underestimate. And even J.P. Morgan came out and said, I don't know exactly what they said, but it was pretty much like, yeah, this is actually very legitimate. And it's the most legitimate challenge to the dollar that we've ever seen, more or less, is what they said. So here we go.
I don't think it's a load of hogwash. I mean, the story, as you rightly say, was that I think something like 50 million ounces was sucked into London when we had the failure on October the 10th. Basically, that contract was effectively suspended. We're not talking about a regulated market, but there were no dealings. It just sort of seized up for about an hour and a half on October the 10th. And consequently, there was an arbitrage coming out of China. But now that China is not only forbidding the export of gold, it is now forbidding the export of silver, or at least will be doing so from January the 1st. So this is, and I think, I don't think it's necessarily, China just saying, we're stopping to supply silver and all the rest of it. This is actually fitting in with their rare earths thing and critical minerals. And, so I think it's part of that wider policy. Yeah. The trouble is that also silver has become, or it is becoming, I don't know quite where we are. It's been recommended to the government that silver should be a critical mineral for the United States as well. So it's difficult to see that the United States, I would assume they've got some stocks. They won't tell us, of course. If they've got some stocks, I think that they'll probably tend to hold on to them. And this is the point about a giffen good. Holders, rather than benefiting from a rising price, sort of take the view, oh my God, there's a shortage of this stuff. We better hold on to ours because we'll never get that. So this is the problem I think that the market faces. I'm not against derivatives at all, but they have their place. But the idea of using them by governments to try and manage commodity prices, I think, is a great mistake. And now we have got 54 years of distortion here to unwind. And I am certain in my own mind that the consequences of this will be spectacular.
While geopolitical infrastructure shifts, the precious metal markets are experiencing dramatic stress. China has tightened export restrictions on both gold and silver, aligning with its broader critical minerals strategy. The United States is moving in the same direction, preparing to classify silver as a critical mineral due to rising industrial demand and fragile supply chains. Simultaneously, countries like China, India, and Saudi Arabia are absorbing physical metal directly from mines, often buying doré and concentrate before it reaches global markets. This bypassing of Western exchanges is draining transparent supply pools in London and New York at unprecedented speed.
A bigger picture first. I mean, look, the trend is here. And the thing is, mainstream doesn't notice the trend. And I think maybe even the people who watch this show don't really realize how big the trend is. Over the last 10 years, price of gold has gone from 1,100 to 4,200. That's a 256% increase. And price of silver has moved from 13 to 57. That's a 315% increase. But I think the real trend right now is in deliveries, like we were talking about. Something big is happening on COMEX. I've been screaming that forever, right? And in the December contract, which went off the board 29th, a couple days after maybe the day after Thanksgiving. So far, over 10,000 COMEX silver futures contracts have stood for delivery. 10,000. At 5,000 ounces each, that's more than 50 million ounces of silver that have been taken off the exchange, including 565 contracts or 2.8 million ounces in a single day. So over 60% of the COMEX registered silver was claimed in just the first 4 days of trading in the 2025 December contract. The demand for physical metal is massively accelerating. This is not normal flow. This is institutional accumulation. And I think that this is something that cannot be overlooked. It really can't be. At the same time, you even have Reuters coming out and saying that the London silver tightness or the liquidity crisis is real. And it's happening. And so you're finding cracks within the system as you see massive shortness and demand for delivery. At the same time, you have countries like China and India and Saudi Arabia and Russia that have been accumulating silver, taking possession of silver and gold, reintegrating it into their system. We're seeing China, the second largest producer in the world, as I've said on your show 1,000,000 times.
Momentum is building on the futures exchanges. In the latest COMEX cycle, more than 10,000 silver contracts, over 50 million ounces, stood for physical delivery in just a few days. That equals more than 60% of all registered COMEX silver. Meanwhile, global industrial demand is exploding. AI data center expansion and renewable energy projects require massive amounts of silver, up to 300 metric tons for a single large solar facility. With 75 million ounces pulled from COMEX since October and Chinese spot prices surging past $60, institutional buyers are draining inventories rapidly. When this pressure reaches the retail market, shortages could emerge almost overnight.
They're going to Mexico and Peru and buying doré and concentrate before it even hits the market by buying this stuff in a pre-refined stage. So they're locking up supply at the source long before it has any chance of reaching the global exchanges. And so I think that this is putting huge stress on the market. Ultimately, will put massive stress on the market. And then you have the U.S. Department of Interior, who adds silver to the 2025 critical minerals list, as we've talked about. And in order to get on that list, by the way, the metal has to be essential to the economy or to national security. Should have a vulnerable supply chain and no easy substitute. So this creates strategic stockpiling demand, and again, and a structural tailwind for demand that's supported by national security and policy. And they should be worried about the supply chain and the geopolitical risk because the United States imports 2/3 of its silver. And, you know, I was reading something the other day that blew my mind. It says AI data centers especially burn through silver. It says every server and power unit uses a little, but tens of thousands of machines lock up thousands of ounces permanently. And powering these centers is even more silver intensive. A 500 megawatt solar farm, enough for one major AI campus, can require up to 300 metric tons of silver or 9 to 10 million ounces. So all of this is happening while the U.S. relies heavily on foreign silver and physical metal is leaving the transparent markets. 75 million ounces have been pulled from COMEX since October. Moved to stronger hands. So, yeah, I think that, look, here's another one. 583 million paper ounces traded on Friday. That's 75% of annual global mine supply in one day. And the COMEX had 103 deliveries and the LBMA 553. So, you know, it's getting crazy. In China on Friday, silver closed above $60 an ounce. And so, you know, we keep seeing the price higher in China, which is kind of pulling the price along with it. I just think that things are beginning to really change. And now you got banks like UBS who are vocal saying that the 300 million ounce physical deficit, and we've been seeing that every year between 1 and 300 million ounces going on the 6th year in a row, is turning them bullish, and they recommend long positions in silver they've never have before. So yeah, I think when you talk about central banks repatriating gold and all of the stuff we've been talking about, standing for delivery, sovereign wealth funds, commercial banks, huge deliveries, to me, what this boils down to is that it will ultimately trickle down into the retail market. And it hasn't yet, but it will. And when it does, it will happen very quickly. Things will just become very difficult to obtain. It doesn't happen at the highest levels and then just stop. I think you'll see it move down into the retail market.